Now, our general view for 2025 is steady to slightly lower rates. We don't expect that long-term rates are going back to 3% anytime soon, and that has a big impact in terms of public market IPOs. But we are overall, we're bullish that even steady rates for 2025 will reopen tech IPO markets, and hopefully deregulation and some changes in the way that M&A is being regulated will be positive for the tech markets also.
And steady rates would also mean it will be as easy or not to raise money?
You know, I think 2022 through 2024 has been some of the most challenging times to raise money. I think you'll see a little bit of liquidity re-entering the market in 2025, but it will take time. These kind of periods, this 3-year period of lack of IPOs has been the longest period in a couple of decades.
It's been like a drought, right?
It really has been a drought. And I think that, you know, hopefully in the second half of 2025, we'll see some really successful tech IPOs. But keep in mind, there's 180-day lockup periods, which really means liquidity won't come back into the market till 2026.
Raj, the other challenge, and this is a region-specific challenge, is that APAC's capital markets have not really come of age yet, have they? And this creates liquidity issues. How does that change? Because it seems that you need to get the regulators, the funds, the institutions all on board to provide a critical mass of products that are going to make IPOs worthwhile.
You know, I'm very bullish on India and Japan and Korea. You've got local public markets there that have really been pushing IPOs in tech and in many other areas. We need to see more of that in Southeast Asia. I also think the other story of Asia is the western part of Asia, in the Middle East, how these economies like Qatar and UAE and Saudi are going to reshape the world through their capital and the way that they're investing capital broadly, but in areas like AI where they're becoming some of the leading investors globally.